Investors around the world are looking to tomorrow's European Central Bank meeting. Joining us right now is Allianz Chief Economic Advisor Mohamed El-Erian. Mohamed, good to see you.
Wonderful to be here.
Yeah, so tomorrow the ECB meeting, and then next week you've got a Federal Reserve meeting. Tomorrow will probably be the big event for markets, yes?
I think so, yes.
What are you expecting?
I expect they will do more. I think they will expand their balance sheet operations. They may even push interest rates more negative, and that is a really risky move. But most importantly is how close are they from being effective to being ineffective. We've seen the Bank of Japan cross that line, and the global system can't afford to have another big central bank cross that line.
So if they cross that line, do you think that would be a big negative for markets? Do we continue what we saw earlier in the year?
Yeah, if they cross that line, if we get the same perverse reaction that we got when the Bank of Japan took interest rates negative. Remember, they expected the currency to depreciate, it appreciated. They expected the stock market to rally, it sold off. If we get a perverse reaction because people say, I don't think central bank can do it anymore, then this will add another bout of volatility at a time when the global economy continues to weaken.
Yeah, you know, it's interesting to me. When you drive interest rates negative, you actually encourage people to hold more cash, which in Japan you can't get a safe these days because they're just sold out.
Wow, is that right?
Oh, yeah.
That's so interesting.
And so what's fascinating is that actually, and you and I understand this monetary policy stuff, but it actually makes the money supply contract as more people move into cash, whereas in the United States, when we're raising rates, we actually have M2 accelerating. So it's sort of amazing. You would think driving rates negative, well, we're raising rates makes the dollar strengthen, but it can actually be the opposite.
Yeah, I mean,
we've seen it in Japan.
If you rely on an imperfect instrument, and you go too far, then you get the collateral damage of using something that's not well suited for the task at hand. And that's what's happened. We've relied on central banks for too long, and markets have thought central banks are their best friends forever. But we're finding out, you know, it's pretty hard to be a best friend forever.
Mohamed, what about the crazy idea that central banks just do nothing? That they just back off and say, particularly with the signs that what they're trying to do isn't working and the markets don't trust it any longer.
You know, a central bank is like a doctor. It will never abandon his or her patient. So this notion that the central bank will suddenly say, I don't have the perfect medication, so I'm walking away, they don't do that. That's not in their nature. So they'll continue to try and do something. The critical thing is the handoff, a handoff to a more comprehensive policy approach that unleashes growth. That's what's needed.
Characterize where we are right now in that regard, in terms of growth. I was feeling recently that sentiment had begun to change, that we're seeing some better numbers. Do you think the broad macro story is getting better?
So I think in the United States, it is getting better gradually. The problem is you cannot be a good house in a bad neighborhood. And the neighborhood, the global economy, continues to weaken. The numbers out of China earlier this week, the trade numbers, were scary. They were scary.
Down more than 25%.
Correct. Some of it is seasonal, but this economy continues to slow down, and the Chinese authorities haven't figured out yet what they need to do. So we are a good house, but we cannot be totally decoupled from the neighborhood.
And I would partly agree with that, but you know, China is a communist country. It doesn't have the rule of law. It doesn't have democracy. No communist country has ever been successful at long-term growth. And I think China's getting close to the end.
So why are we so focused on China?
Well, we shouldn't be.
Yeah.
I would change it the opposite way. If your neighbor wants to drink himself to death, unless your 7-year-old daughter sees it happen all on the front lawn, your house is fine. And so the bottom line is that I've never believed that Japan collapsed. They were the #2 economy in the world, and the U.S. had a great 1990s. So this idea that they can take us down or the world down, I'm not.
But they have been, right? I mean, that's been a big focus in 2016.
Fear. They've caused fear. Last year, oil prices came down. We needed all the pipeline, railroads, I mean, pumps, everything we needed. And all that stopped, and now we're growing again. And so I think last year was a story of collapsing oil drilling. This year is a story where that no longer pulls us down.
Would you put new money to work in equities today?
Right now, no. I think you have to be more tactical. I think we will continue to have volatility. And the hardest thing for investors is how do you be tactical when you want to be strategic. And what this market is telling you is we're going to have massive plus and minus 10% swings. And if you want to make money this year, you're going to have a tactical element in addition to your strategic element.
What does that mean, Mohamed?
It means that you're going to have to fade rallies, and then you're going to have the courage to step in when things clearly have overshot.
Is the election going to be, do you think the presidential election becomes a catalyst for markets?
I think it becomes a contributor to price movement. So far, my sense is markets don't know how to price it. There are so many potential outcomes. This has been such a surprising season that markets simply don't know how to price it. Do you price a brokered convention? What do you price? So markets are waiting for clarity, and we're going to have more clarity in the next couple of weeks as these primaries continue.
Yeah, it's really been an uncertain period. It's just pretty amazing. Mohamed, great to have your insights.
Thank you.
Congratulations on the book.
Thank you very much.
Mohamed El-Erian.